Hello, hello, hello. This is Maggie Clemens, the owner and broker of One World Realty. And this video is about the San Diego area real estate stats through October of 2019. So let's get at it. Every single month, let me put this over here, I go over this report. This report is called the Monthly Indicators Report. It comes from the Greater San Diego Association of Realtors. It is a PDF. I'm happy to send it to you. If you would like it, just send me off an email and I'm happy to send it to you. So let's get taking a look at it. Move this over here. So through October of 2019, here's what it says. While the Federal Reserve reduced the federal fund target rate by 0.25, a quarter of a percent, this decline was widely expected and largely factored into rates which were already approximately 1% lower than they were last year. I remember this time last year telling my customers that this is, we are getting close to that recession that we were predicting. And now here we are a year later and rates are lower and the market is doing better than it ever has been. So closed sales, just a recap, closed sales have increased, pending sales have increased, inventory decreased, median sales price is up, days on market decreased, and supply is down. Lastly, the historically low mortgage rates will continue to support buyer demand and may create additional lift to home prices. Mortgage rates go down, more buyers out there, prices go up. Additional lift to home prices, as excellent affordability gives buyers the ability to offer more to secure their dream home. So that is actually what we're seeing happening right now. So let's kind of go through this. This first page is on the, gotta get my face out of the way, the detached market only. So single family homes. It does not include condos, townhouses, or mobile homes. And basically, so just a breakdown here, this is comparing October of 2018 with October of 2019, where this compares January 1, 2018 to October 30th or 31st of 2018, and then the same period for 2019. So you'll see I look at the yearly numbers a lot more than I look at the monthly numbers. Get that over here. All right, so new listings in single family homes has gone down from October to October, but you can see on a year to date, it is still down, but it's not down nearly as much. And if we look at these charts, which I like, it shows the history. See, real estate is not something that can be predicted today. This is what's going to happen tomorrow. This is what's going to happen next month. Real estate is more of a trend type investment. So it takes a while to build up to that. It's rare that we see, boom, a sudden drop or a sudden lift. And so what we're seeing here is from October of 2017, and we see, wow, October, November, December, it like dived. And then it kind of went up, and then December it dived again, went up a little bit, and now we're seeing it kind of level out. So from October to October, so from here to here, you can see there is a significant drop. And you can see from the yearly chart that it is slightly lower. Pending sales are up. Look at this, from October to October, it is up 24%, but we can see year to date, it's almost at its peak, which was in April and May. So why do you think that is? Mortgage rates. Just as I said on the previous page, as the mortgage rates drop, we get more buyers that have been on the fence and they're thinking, I got to jump now. And so that's what we're seeing happening in the single family market. And for the year to date, we can see that it's up. So even though new listings are down, actual closings are up. So what's that going to do for the supply? We'll see here in a second. Closed sales are up, just barely breaking even, or just slightly below even on a year to date. Median sales price is up. It shows it's up from October to October 3.3%, but year to date, which is more what we're going to look at, is 1.6%. So this is where we're at. If you've been following us at all, you'll see that I've been talking about how we're going to be bumping along the bottom, and this is what bumping along the bottom looks like. The Fed, kind of boost us up a little bit by reducing the mortgage rates, but the home prices are going up a little bit, so it's at some point it's going to negate itself. Average sales price is up for the year, at 0.4. Volume of closed sales is pretty much even for last year, which is amazing. And percentage of percentage of list price received is pretty much even also. Let's see, days on market. I love these numbers because on a year-to-date, it shows that last year, the average days on market for a single-family home was 29 days, where this year it's gone up a little bit to 33 days. That looks like a big number, plus 13.8%. Wow. But when you actually look at it, it's 4 days, so it's not that big of a deal. Housing affordability, this again is our Achilles heel because it is expensive to live in San Diego. Home prices are going up, and that would be great if wages were also keeping up, which we know we have a little bit of a problem here in San Diego. So single-family home affordability year-to-date has risen 19.1%, and we're going to go over that again in another slide. Inventory of homes, check this out, minus 31.3%. So for the month of October 2019, we only had 3,852 single-family homes on the market. Well, when the feds dropped the rates, all those buyers wanted to buy houses. If you can get for just a few $1,000s more a house as opposed to a townhouse, people are going for the houses, and we're going to see how that's reflected. So we again and still are at a low inventory issue. Months of inventory has dropped from 3.1 to 2.1. What that means is that if not another new home comes on the market, we will totally sell out of supply in 2.1 months. Let's take a look at the attached. Attached would be condos and townhomes only, not including the single-family homes. We're seeing a little bit of a different story here. The the townhomes have gone from October to October has actually dropped in new listings, and it's just slightly dropped from the year to date. Pending sales is up from October to October, but just slightly down from year to date. Closed sales are down, and medium sales prices inched up a little, where we saw it was 1.6 for single family homes. It's 1.3 for townhomes and condominiums. Average sales price is about even, 0.3. Sales volume is actually down, and that's probably because closed sales are down. Percentage of original price received is down slightly. Days on market has gone up. Again, it went last year, year to date, it was 25 days on market. This year, it's 31 days on market. So it has gone up a little bit, but 31 days is not a long time. Affordability in townhomes and condos has also gone up, 19.4% for the year. Inventory of homes has dropped 14%, so we only have 2,021. So you remember at the end of October, we had 3,852, so we're like almost just under 6,000 active homes for sale in the entire San Diego County. So that is a very, very limited supply, and that's what's causing prices to continue to increase. Months of inventory is down 12%, or from 2.5 to 2.2 in October of 2019. So let's take a look at this. These graphs are for both single-family homes and for townhouses. They kind of break it up a little bit, but what I really like here is that it shows the charts. And I can tell you all the way back to May of 2012 that every December, starting in November, we start to see a drop of new listings. So even though we don't have snow in San Diego, we do still have the holiday mentality, and people just do not want to have people traipsing through their house during the holidays. So we start to see a decline. We actually start to see people put in their house or withdraw their house from the market until after the first of the year. And then after the first of the year, you can see boom, it starts right off the bat going up all the way. So this is what I mean about looking at the trends of real estate. Yes, the numbers look bleak, that we see a nosedive in new listings, but this is nothing new for us. And right here, all this is saying is, even though we see this every single year, it's a little bit sharper, a little bit steeper. So these are the red flags that we're trying to look at and trying to see how it's going to affect the market in the future. And then the red one is for attached, which closely mimics the single family homes. Pending sales, we can see from October of 2017, October of 2018, and then October of 2019. So 2018 was not a great year. We were predicting that the recession was probably right around the corner. Obviously, we were wrong. We got a little bit of a boost from the Fed, and it's caused the market to go back up again, which is great. That's what it was designed to do. Attached homes is up to 991 at plus 18.1%. And then here are our numbers. You can see it's fluctuating a little bit in single family houses, but and pretty damn steady. Oops, did I say that? Pretty darn steady on attached homes. On a rolling 12-month average, for pending sales, we're up 2.6 for single family homes and a minus 3.6 for attached homes. And we are seeing the trend here. This is actually pretty predictable. What's different is that, we're getting close enough in prices that where buyers are jumping into single family homes as opposed to the townhouses. That will switch. Will it be next month? I don't know, but we'll see. Closed sales, we can see that it's slightly in 2018 dropped, and then it came up just a little bit in 2019 for single family homes, but it is still down for attached homes. And again, I've beat that horse to death. We have a price issue. So you can see that graph here. Nothing that is, really out of the ordinary at this point. It's too bad this graph doesn't go all the way back to 2006, because that's when it gets really squirrely. Median home price continues to increase. We can see in both single family homes and in townhomes that it's going up across the board. 12-month average is 1.6 for single family homes and 1.4 for condominiums and townhouses. And this is our graph here. We can just see it's been going. Where's it going to stop? Nobody knows. Average sales price as opposed to the median sales price, it kind of follows the same, maybe a little bit more fluctuation because of the calculation, but it's definitely an upward trend in both single family and attached homes. The dollar volume of closed sales in millions. So we can see from 17, 18, and 19, the dollar volume is not a whole lot of difference in both the single family home and in the attached homes. So that means that, the increase in price is making up for some of the lower sales numbers. And there's that balance that we got to try and figure out. Dollar volume is up 2.7% for single family homes, and it's down 2% for townhomes. And we can see that through the history here, through the time, totally not unexpected, but we're seeing it staying up here a little bit longer. And now why would that be? You got it. Fed dropped the rates, boosted the buyers. How long are they going to be able to do that? That's the question. Percentage of original list price received. And you can see over the last 3 years, it's been relatively the same. 12-month average for single family homes is 3% or minus 3%. And for detached homes, it's a minus 6%. But, it's pretty much staying the same as we go through the seasons. 2013, that was a good time to buy a house. Days on the market until sale. So these numbers are fluctuating. It looks like it's fluctuating wildly by, 11.5% for single family homes and 24% for an attached homes. But when we look at the actual numbers, it's not that significant. So in a single family home, it went from 32 in 2017 to 35 in 18 and 34 days on market in 2019. So it's not that bad. Attached homes, 26, 29, and 31. So we are seeing a slight increase, but nothing to Really, is there that big of a difference between 29 days on market and 31 days on market? I don't think so, but they don't pay me the big bucks. Housing affordability. This is our issue, and it's going to be our issue for a long, long time. There's got to be a way that we need to do this. So let me try and explain this because it's hard. So right now, let's look at the year-to-date figures. 56% for single-family homes and 86% for an attached market. So what this is saying is that a medium income home has 86% of what is needed to qualify for a medium income townhome. On a single-family house, the medium income has 56% of what it takes to qualify for a medium priced home in San Diego County. So what does that tell you? If you're single in San Diego, it's going to be very tough for you to get into the market at this point. 56%, this is why we see more married couples or more people teaming up and buying houses, because the two incomes combined will equal 100. And same here. 86%. So a single person making a medium income is only going to be able to qualify for 86% of a medium home price. So this is why when I'm always harping on employers. San Diego notoriously has had the pick of the litter because of our climate. Everybody wants to live here, but they haven't had to pay people to live here or to move here. And that's going to, at some point, cost us. When? 5 years, 10 years, 1 year, who knows? But we can see how the affordability was high. It was easier to buy a home in 2013, and then it dropped, and then it came up just a little bit because of the mortgage rates, which we know can't stay there. Inventory of homes. For a single family home, you can see how drastic this is. From 2017, we had 4,155. 2018, when we thought the market was going to shift, it went up to 5,611. We thought we were going to start getting back to normal, whatever normal is, and then it drops down to 3,852. And the numbers aren't quite as drastic on attached homes, but it's still there. And you can see that it's not abnormal, but we are seeing an influence from the mortgage rates. Month supply of inventory. For a single family home, it is down to 2.1 from last year's 3.1. So we were thinking things were going to get bad or slow up. Well, they didn't. And same, it's 2.2 for a attached home. So we can see that, typically it went down and then it went up, and now it went down again. It's because of the drop in the mortgage rate, which is great. The total market. So this is combining them both, and I won't spend a lot of time going over that, but closed sales for both is down 2%. Dollar volume is down 1.1%, while affordability index is up 18.9%. So that's it, folks. Right now, we have a market that is very influenced by the mortgage rates, which it always is. But the problem is that it is still pushing home prices up. And at some point, that is going to have to adjust. We don't know when that is, but if you have any questions, any concerns, if I can send you a copy of this, I'm happy to do it. Just shoot me off an email or give me a phone call. Until then, take care.